If you've been laid off or you left your company, before you do anything with your 401k, find out all the ins and outs. Call Phillis today, 623-792-5496. That's 623-792-5496.
Thanks for joining us today. This is Retire Financially Fit with Phyllis, and I am Jen Rezac. Happy to be here with Phyllis Saxbill-Venus. She's founder and president of PSP and Associates. With everything that's been going on, we know a lot of you have questions about the market, how your money's doing, what you should be doing with your portfolio. So today you're going to hear a lot about Phyllis's Retire Fit analysis and how it can help you get some answers to take advantage of that Retire Fit analysis that we'll talk about throughout the show today. All you have to do is call 623-792-5496. One more time, that's 623-792-5496. And you can always check out the website, retirewithpsp.com. And Phyllis, have you ever been caught off guard by anything? Am I catching you off guard right now?
Oh, yeah. I was thinking about something else. You got me off guard. That's a good thing.
I got
Keeps
you.
me sharp.
Yes, exactly. We've all been caught off guard at some point. It is not a good feeling. Now, sometimes it's funny. Some of the things my kids come up with and the questions they ask, and they put me on the spot, and I panic and I freeze and I don't know. I don't know what to say. That happens to all of us. But other times, it's more of like a physical, you feel paralyzed. Things hit you all at once. And I feel like that is something a lot of people have dealt with a lot lately, Phyllis, this kind of analysis paralysis. We're overthinking everything. We just don't know how to act because it's all hitting us all at once. Has that been happening to people lately, do you think, if they need to be making some decisions about their retirement?
Yeah, absolutely. It's just all of a sudden it all becomes real. Things are going along great and, just ticking right along. And then boom, all this chaos happens. And then, now all of a sudden, every which way, what's going to happen when?
Right.
That's exactly right.
Right.
It's really, really difficult for some people to, say, now I've got to do this. It's real.
Yeah. Well, and it's hard to know how quickly you need to make decisions too. I mean, we were talking about this a little bit offline before the show, but my parents are facing some decisions right now based on my mom's health. Do they need to go ahead and retire so they can focus on getting her better and she can focus on getting better and dad can just take care of her? And it's hard to know what type of decision to make. And I'm really learning just how difficult this decision is, Phyllis. It's been one thing for me to get on here with you for a few years now and talk about how, I know people are struggling with these decisions, but I'm living it now. And it's hard.
Absolutely. But Jen, in our conversation, what I heard from you is there was some critical thinking going on.
Yes.
All the options were flushed out, laid on the table first.
Right.
And then they're taking a step back and they're looking at all of them. They've got all the facts and then they're going to make a well-informed decision. And it's the same thing that you need to do with retirement planning. And right now, there's a lot of chaos going on and a lot of things that you didn't think maybe you had to consider right now. You could push it down the road a little bit. We'll probably need to. But before you make knee-jerk decisions, you need to just get the facts out on the table. Get them out on the table. Where are you at in this retirement continuum? And that's what we talk about. That's exactly what our Retire Fit analysis is all about. That's what I've been, I guess you'd call it, preaching each week for over 3 years now that we've been doing this. That first and foremost, the best way to make a decision is to understand the things that you're going to be faced with and get some education, get some facts in front of you so that you can make well-informed decisions. Yes, this is a scary time, but it's going to be scarier if you just react. Let's be proactive, not reactive. And the Retire Fit analysis that we offer to you is a process that will take you through that whole analysis before you make reactive decisions. You'll be able to be proactive with it. And, that's why I encourage anybody, if you're within 10 years of retirement, even if you've already retired and you're not really crystal clear about why you're doing what, when, it's a great time to let's go through this Retire fit analysis process together. There's no obligation. It's complementary. I don't know if I can help you. I don't know, you may be all set. You may not be in a position where you can really act on some of the things right now, but I'll bet you I'll give you more information than you had before you came in. And if you've done the heavy lifting, you've saved at least $250,000 or more for retirement, why wouldn't you want to get clarity during this chaotic time especially? So pick up the phone and call us at 623-792-5496. Again, 623-792-5496. And let me just tell you this, there are plenty of ways that we can get this ball rolling during this bad time. Okay, we can just pick up the phone and talk for 15 minutes if you prefer that, and I'll walk you through one-on-one what the process looks like. Then we can do a Zoom meeting where we're going to feel like we're in the room together, or perhaps if you want to come on in, we have a very big conference room. We're very clean and antiseptic. We're over 6 feet apart. We all wear masks, so there's no reason to have to put this off. Mm-hmm. Really, if you don't know the decisions that you might be faced with, or if you don't feel like you really understand your situation, now's a great time to pick up the phone and call us for your Retire Fit analysis, 623-792-5496. It's a process that will take you through all of the things that you need to look at to have a complete retirement plan. Make sure that you'll always be proactive, not reactive.
Talking today with Phillis Sachs-Pilvinus. She's founder and president of PSP and Associates. She is author of the book, Creating Calm Amidst the Storm. That phone number one more time, 623-792-5496. And Phillis, I know we've talked about this lately, but the title of your book, Creating Calm Amidst the Storm, to me, it fits what's happening right now perfectly, because we're just in the middle of all of this chaos, all of these things that are going on. There's so much uncertainty, and I know that's a word we're all tired of right now. In these uncertain times is what we've heard so many times over the past few weeks and months. But talk a little bit about how taking the time to sit down and talk with someone like you can actually create that calm amidst the storm, because we get that calm, we get that sense of peace through planning and through having some certainty and knowing what we're going to do when something happens, rather than all of that doubt and just not being sure how we're going to react when something happens.
Yeah, here's the thing. Most people are so in control of the job that they choose during their working lives and their salary. And then all of a sudden, as you get close to retirement, all these things get thrown your way, whether it's a change in health, whether it's a spouse's change in health, or whether you get downsized and now all of a sudden you don't have a job and you're older and your opportunities are less, or whether taxes go way up, or whether there's a market situation, or in this case, a health crisis. And when I wrote the book, I picked that title because I can guarantee you throughout retirement, things are going to change. Life's going to happen. Mm-hmm. Okay, I've seen it for so many years. I've been in this industry a very long time. And the way to make sure that you have that calm no matter what's thrown your way is to not just let someone like me put together a plan for you and say, here it is, you're good, but let someone like me take you through the process of what you need to consider and why you need to consider it, what's going on with your money, and what are your options to be better insulated. And the Retire Fit analysis process goes through all the pieces of what we call the retirement puzzle. It starts with helping you really understand and figure out what your budget's going to look like in retirement, for the fun things, for the discretionary expenses, for the real expenses. Then it goes through, okay, here's what we want to spend, inflation-adjusted income, but what's actually going on? What is our income plan? Is there a gap between what we're going to have coming in after we've selected the best Social Security option? And that's very complicated in and of itself. And the best pension option. What's our gap for income? Okay, there's a gap. Where should we get this money from? Well, let's look at our investments. When are we going to need this money and how much are we going to need? And with our investments, How much income are they throwing off? Do they give us dividends and interest when the market's up or down?
Running out of money is still the number one fear for baby boomers, and for good reason. Projections show that among pre-retirees, 40% of households will run short of money in retirement.
I know this is the most common fear for most of the people I work with. They want to know if they've saved enough. Everybody gets caught up in how much they've saved. But what you really need to think about is how much you'll need to spend in retirement. What could it take for you to live your ideal lifestyle for the next 30 years or maybe even longer? Even if you think you already have an income strategy, I sincerely invite you to call so we can help you to create a budget to figure out how much you'll need for the retirement you've been dreaming about. Uncover the main risks posing a threat to your retirement, including inflation, stock market volatility, potential tax increases, and yes, skyrocketing healthcare costs. And I want to help you learn about the options for generating income in retirement. And I want to help you learn how to keep your current standard of living in retirement even as these costs keep rising. So if you're listening to the show today, this is for you. It's not going to cost you anything to do this analysis, and there's no obligation. So whether you've saved lots of millions, maybe $500,000, or maybe even less, I want you to pick up the phone and call us for this retirement income analysis. And the number to do that is 623-792-5496. The strategies we use are designed to help make sure that the money won't run out no matter how long you live in retirement. We aren't doing this to make you rich or double or triple your money, but we want to make sure you don't end up outliving your retirement savings. Again, that number is 623-792-5496.
You really need to take advantage of this opportunity from Phillis to make sure you won't run out of money. And you might be able to even boost the size of your portfolio. So get started today at 623-792-5496. That's 623-792-5496. This is Retire Financially Fit with Phillis. We'll be back.
When it comes to your health, it's clear. You consult your doctor. So why not consult a professional when it comes to money? Just like your doctor, the advice you get from a financial advisor can have a direct impact on your quality of life. Are you paying too much in fees with your current financial professional? What could happen to your nest egg if there's a market correction? If you're unsure, it may be time for a second opinion. Phillis Sachs-Pilvinus is an independent advisor. She doesn't have a boss on Wall Street. Phillis and her team at PSP and Associates specialize in designing retirement strategies that can allow you to spend more time enjoying life and less time being concerned about your finances. Get your second opinion. 623-792-5496. Phillis Sachs-Pilvinus and PSP and Associates can help make sure your golden years are just that. Golden. 623-792-5496. That's 623-792-5496. Investment advisory services are offered through PSP Financial Services, LLC, an Arizona registered investment advisor. Phillis Sachs-Pilvinus is also a licensed insurance agent in the state of Arizona.
Thanks for joining us today. This is Retire Financially Fit with Phillis. I'm Jen Rezac, happy to be here with Phillis Sachs-Pilvinus. She's founder and president of PSP and Associates, author of the book Creating Calm Amidst the Storm. Phillis was the first female advisor on the cover of Senior Market Advisors magazine. You can check her out online at retirewithpsp.com. Lots of great resources available there on the website, retirewithpsp.com. And Phillis, a lot of us are creatures of habit. Let me ask you, when it comes to going to your favorite restaurant, do you have like a usual order or do you like to try something different every time? How do you go?
Usual order. It's almost sickening.
Well,
It is.
All right. I wasn't gonna
Coffee
go
a certain way.
Yes. Well, yeah, don't mess with my coffee. Seriously.
Yeah.
I don't do frou-frou coffee.
I don't either.
I just don't mess with that. But, I'll step out a little bit if, I'll try something different every now and then, especially if I'm on a vacation. I really want to try something different when I try somewhere new. But yeah, there's just something comforting about the usual things that we have and just the routines that we have. I mean, it's just my way of life right now. Routines are helpful. And we recently had the kids switch doctors, I guess I should say, in the past year or so. And it's fine, but it was kind of a hassle to deal with all that. And when it comes to, your bank and your dentist and all those things, I just like things done a certain way. And I will tell you, recently I had to go to a new dentist, or no, it was just a new hygienist at my dentist's office. And I just wanted the old hygienist back. It just,
Yep,
it just wasn't, it just wasn't what I was used to. And she didn't ask me, Phyllis, what flavor of toothpaste that I wanted. And she just picked one and she guessed wrong. She picked blueberry.
Ooh.
Have you ever wanted to brush your teeth with a blueberry,
No.
Phyllis, ever?
No. Never.
What
You're
was
funny.
she thinking? No, it was, so I get it. I like things a certain way. I want it done the way I want it done, and it's hard to deal with something new. So I get that people have a hard time making a transition or adjustments when they get close to retirement, but I want to talk about why that's important because, and we've talked about this before on the show, Phyllis, that whole analogy of climbing a mountain where you get to the top and everything changes when you're coming back down. We've talked about this analogy before, and Phyllis, I lived this climbing a mountain with one of my kids and finally realizing where it really, really hit home with me that, things really do have to change. Everything's different and I'm only halfway done. I finally understood that, but we really need to understand that when it comes to our retirement, right?
That's crucial. And boy, being 61 years old, I have become so much of a creature of habit. The older you get, I really think the more you get set in your ways. However, one of the worst things that can happen is if you continue to do what you've done with your planning. Mm-hmm. I think it's almost cruel that it's not, I want to scream it from the rooftop. All the rules, all the tools, everything that you've done with your money thus far has to change in retirement because what you've got is now finite.
Yeah. Yeah.
So, it is essential that you understand your money needs to do different things. Mm-hmm. And sometimes even the relationship you have, if you're working with someone who's helped you grow your money and save your money and told you, those things, well, if they don't necessarily know how to help you distribute your money or how to plan tax efficiently, that's, going to come back to bite you.
Yeah.
So here's what I suggest. I really strongly suggest that as you start transitioning into retirement, or even if you haven't done it yet, if you're in retirement, sit down with someone like me and, hopefully me, right? Yeah. And let us walk you through the process. Ours is the Retire Fit analysis, and it will take you through each part of the retirement puzzle to make sure that you've accounted for it. And then you'll see very loud and clear, things have changed. If all you do is focus on growth, that's great while you're growing the money and you have a paycheck coming in. But that is going to upset the apple cart and really shorten your, really put a ding in your lifestyle if you don't do things differently in retirement.
Right.
And night and day.
Well, and I want to talk a little bit about how some of those changes that we need to be aware of, especially when it comes to getting income from the things that we've been saving into all of these years. And I go back to the analogy that I tried to bring up a couple minutes ago with this idea of climbing the mountain. When you're going up a mountain, that's the years that you're building up your savings. You're in your working years. You've got that money that's going straight into your 401k or wherever it is that you're saving it, that's just kind of where you go on autopilot. That's the routine. That's what you're doing. And when you're climbing a mountain, you're looking up at the summit, you're pushing up. You can't screw that part up. You can't miss the top of the mountain. It's up there, right? I mean, you'll get there.
You might fall a few times.
You might stumble, but you're not going to miss the top of the mountain. It's up there. But the last time we were doing this, the whole way up, the guide who was with us kept reminding us, you are only halfway there when you get to the top. Don't forget, you are only halfway there when you get to the top. And I heard him say it all day. And all right, fine. I hear you, Brian. I hear you saying that we're only halfway there. But I didn't fully understand it until we made it to the top. And I was with my daughter, Kristen. We took selfies, we celebrated, we took in the view, phenomenal view from the top of this 14,000-foot mountain in Colorado. Just stunning. And so it's just such a celebration, such a big moment that we made it up there. And then when it was time for us to start heading down, that's when it really hit me like a ton of bricks. That's the first time I looked down and realized really how high we were and just what I was going to have to do to get back down. I could see our cars, just these tiny little white vans at the bottom of this mountain. I could see them from so far away. And I thought, how am I going to get back down there? And I'm only halfway done. And the guide's like, I've been telling you that all day. And I'm like, I know, but it just hit me. And that's when everything changed, because when you're going back down, then you're worried about slipping and falling down because you're facing down, you're looking down. And that's when it becomes a bigger risk of actually falling. Talk a little bit about how that works with our money, because we have to be aware of falling and stumbling when we're taking money out of all of these accounts that we've been building into all this time.
That's exactly right. And people we grow up understanding that the markets go up and down and that they always come back, right? So when you're saving for the long term, if the market goes down and you continue to add money in, that's dollar cost averaging. And that's almost a good thing because, yes, history tells us market always comes back over the long term. However, when you're taking money out for income and the market goes down, you never get back to where you were because you're selling off shares at a much lower price. If your stock was $100 at the market height, and then it went down to, just to make it easy, $50, and you need $200 a month to maintain your lifestyle, well, you've got to sell 4 shares, where before you were selling 2. You're doing reverse dollar cost averaging, and it can really shorten your portfolio, the length of time that your money's going to last you in a downturn. And now another thing is when you're working, taxes, you've got to pay the taxes. You've got your paycheck. You've got to pay those taxes. You're left. It is what it is. You can deduct some into your retirement account, but when you're in retirement and all of a sudden you're taking money out of these taxable accounts, your retirement accounts, you've got to take out a certain amount. Uncle Sam requires it. Otherwise, there's a penalty. And you could, at that point in time, if you knew those taxes were coming, you could adjust things differently to control that a lot better. You don't think about that when you're working. You're busy saving. You're busy just paying what you got to pay. But when you get into retirement, you have a lot more control over that future tax liability that you're not even aware of than you may know. So it's really, really, really important to focus on tax planning, understand when you're going to need your money coming out of the market, and plan so much differently.
So let's talk a little bit about how we do that, because we just have to make sure that we are ready for the possibility of living a long time in retirement. We've got to make sure that the money's going to last, and we have to think about some of these other factors. Only 4% of Americans are taking Social Security at the optimal time, and that means most of us are taking our benefits at the wrong time, and we are losing out on tens of thousands of dollars over a lifetime.
The average household could be missing out on about $110,000 in unclaimed Social Security benefits, and that's because of people taking their benefits at the wrong time. Unfortunately, not many financial advisors are willing to talk about this. I don't know about you, but to me, $100,000 is a significant amount of money. And I wouldn't want to accidentally miss out on a benefit like that. There are a lot of variables that you need to consider before you start taking Social Security. So I am offering a free Social Security analysis to help you sort through all the different options for how to claim your benefits. I want to help you learn about the potential impact your decisions can have on your taxes, on your Medicare, on spousal benefits, and even more. And I want to help you pinpoint the precise time to start taking your Social Security to make sure you are not missing out on tens of thousands of dollars in benefits. The Social Security Administration can't help you with any of this. They can help you with the facts about your Social Security, but they can't teach you how to make the most out of your benefit. That's what our Social Security analysis can do for you when you call us at 623-792-5496. Remember, Social Security is one of the most important financial decisions that you'll ever make. So if you've saved at least $250,000 or more and you've not started taking your benefits yet, call me right away so that you can get this Social Security analysis at 623-792-5496.
You heard that right. You could be missing out on tens of thousands of dollars in lifetime income, or you could be living your best case scenario. It's just a matter of claiming your Social Security at the right time. So call now for that free Social Security analysis at 623-792-5496. Thanks for joining us today. This is Retire Financially Fit with Phyllis. I am Jen Rezac, happy to be here alongside Phyllis Saxbill-Venus. She is founder and president of PSP and Associates, author of the book Creating Calm Amidst the Storm. As we get back into it, if you hear something you'd like to get some answers on, 623-792-5496 is the number. That's 623-792-5496. Phyllis, I know you have to have a junk drawer in your house just like I do in my house. You have a junk drawer, right? Or are you one of those people?
I absolutely do. Wherever my husband leaves stuff on the counter,
it goes in there.
Whatever's left on the counter goes in the junk drawer, and he's constantly getting frustrated because he can't find it.
Well, then you should have put it away, Harry. You should have put it away the first time.
That's exactly right. It stays out for a little while, and then it goes there. At least it's in one place.
Yes, I know. And we have these too. We actually have a couple of junk drawers because I have mine that has like all the recipes that I print out, and it has coupons and just all my little kitchen-y things that I need, and my chalk, because I have a chalkboard in my kitchen where I write my menus out, and I have mine. And then the kids have their own and theirs.
Isn't there room to hold junk drawer?
Oh my God. Yes. The majority of our house is their junk drawer. And they have, the stash of batteries for their Wii remotes and all their little remote control things and rubber bands and scissors and just all the stuff that gets put in there. And here's the thing. A junk drawer is good because you keep all the stuff in it, but then it's a nightmare because it's unorganized, it's not functional, and that's what is frustrating to me about the junk drawer. And as we think about that, I wonder how many people come to you and they think they've got a plan, they think they've got all this stuff sorted out, but what you see is kind of a financial junk drawer. It's just all this stuff that needs to be organized.
Yeah, I understand it. But what I usually see is a financial junk drawer, because you think about it. You've worked, in your lifetime, maybe you've worked 2-3 places, and so now you've got some 401ks. Maybe you rolled it over to an IRA. Maybe you didn't. You got a little bit here. You got a little bit there. The friend of a friend of a friend got in, right. Talked to you about this. You got stuff all over. And again, old habits die hard. So what most people focus on during the accumulation phase is, because Fidelity tells you to, is build up X amount of dollars and then you're golden. So they walk into our office with stuff all over the place, and I'm glad they've saved. A little here, a little here, a little there, a little there. And they're feeling pretty good about it because they've saved enough money to retire. That's just a piece. That's just one
Just a
step.
little bit of it,
And
right.
yeah, but if you have that financial junk drawer and you don't organize it and you don't know when to utilize things and you don't know when to take out of which taxable account or which tax deferred account and when, that junk drawer can turn into a real pain. Like you were just saying, very complicated. So that's kind of what we do. We organize that junk drawer for people. I'm glad you have it. I hope you have a lot of stuff and I hope you've accumulated. But now we've got to organize it. Otherwise, it's going to cost you. How many times, I don't know about you, but my husband will say, I went out and bought something new because I couldn't find X. Right?
Yes.
Right? We don't want to do that in our junk drawer. We don't want to pay more than our fair share of taxes because we didn't understand the best tax efficient strategy for taking money out in retirement, for one thing. Yeah.
So let's talk a little bit about that because you are exactly right. The number of times we go and we buy another little tool or another little this or that, not realizing that we had exactly what we needed. We just couldn't find it. Talk a little bit about how we do that inventory of all the stuff we have with our retirement so we understand what we have. And then we start to understand how to use it. And then I wonder, Phyllis, once you've helped people with those things, can we make changes to any of these things if it turns out that maybe we're not set up the way that we need to be?
Wow, that's a long question.
That is a lot. And now I'm going to sit back and I'm just going to let you go.
So one really great functional part of our retire fit analysis is we take the whole junk drawer and we put together an asset sheet and we lay it out from whether it's safe, whether it's at risk, whether we look at tax diversification. How is it going to be taxed? Is it taxed all the time with the 1099-R? Is it tax deferred where you'll pay the taxes later, or have you already paid the taxes? We lay it all out. If it's a couple, we break it down by what's the husband's retirement accounts, what's the wife's, what's joint, how's it titled, and that really begins to make some sense. Here it all is, and we lay it out by different investment types, different risks. So do you have CDs? Do you have it in cash? Do you have it in the money market? Do you have it in an annuity? Do you have it in life insurance? Where is all your money? What's the asset diversification? What's the tax diversification? What's the risk? How much risk you're taking? We break it all down, and the asset sheet's a great place to start. And then we go through different diversification. So, we look at everything. And we also do the same thing with income sources, reliable income sources. What are those? Maybe you have 2 pensions. How much is coming in? When is that going to come in? Social Security. We want to look at the best way to take that. We look at the different strategies and we analyze all that. So we kind of take that junk drawer and we organize it. And in answer to your question, Jen, can we change things? Absolutely. Once you lay it all out and we figure out what we need our money to do and when in retirement, there's certainly things that you can move around. But before you move it around, what we want people to do is understand where your assets lie, understand what's important about them, understand what you need the money to do and what it's actually doing. And we break it down into bite-sized pieces. We actually call it our retire fit report card. Okay. So we build that asset sheet and we talk about what your budget is. And then we look at your security income score. So based upon how much income you're going to need, how much income do you have coming in reliably? And we compare that to what it's going to cost you to fund your retirement. Mm-hmm. And we show you any gaps there. And then we go through, we assess all of your investments. We look at asset diversification. Are you diversified enough? We look at income projections. We look at how much stress that you're taking. It's our portfolio audit, okay? And we look at the fees that you're taking. And then we go to taxes and we show you, what your tax liability is today and what's your future tax liability based upon, your tax rates. What's it going to cost you in the future for taxes? And we lay all that piece out. And we also, something that's really helpful for people is tax diversification. How much do you have where it's always taxed? How much do you have that's tax-free? How much do you have that's tax-deferred? How are you diversified there? And as we break it all down, as you can see, that light bulbs go off in people's heads. It's interesting as I watch them. And then we can back into it and start building a plan that makes sense for them for what they want to accomplish in retirement and when they're going to need the money and how they want to spend it. So that's the Retire Fit analysis.
And you can get started on that Retire Fit analysis by picking up the phone, giving Phyllis a call today, 623-792-5496. Again, that's 623-792-5496. And I think it's important, Phyllis, to point out a second opinion is a big part of this as well, because you're doing a lot of reviewing, looking at some of the things that people have done, and then either giving them validation or making recommendations on some changes. So it really is just like getting a second opinion at the doctor's office, because there could be some things that we just don't see because we don't do this every day. We don't understand what the tax liabilities could be, because you can look at some of these things and what the tax impact could be on some of these things that we just don't understand, right?
Yeah, I got to tell you, so many people come in and they understand their investments, but they're or maybe they don't know the exact risk, but they have a good idea of how much they've accumulated and where it is, but they're blown away when we go into that tax analysis, the tax diversification part, because nobody's done that with them before. Nobody's done that. And that's huge. So a second opinion, if you're in good stead and you've done it, confirmation is wonderful. But if you have some things out of line, when would you want to learn about it? When you can control it or when it's too late? When you can control it.
Yes, absolutely.
So if you've worked hard, you've saved at least $250,000 or more for retirement, whether you're getting close to retirement, whether you've already retired, if you really are not sure that you don't know what you don't know, or that you're on point with everything, great reason to pick up the phone and call us, 623-792-5496. Again, that number is 623-792-5496.
Running out of money is still the number one fear for baby boomers, and for good reason. Projections show that among pre-retirees, 40% of households will run short of money in retirement.
I know this is the most common fear for most of the people I work with. They want to know if they've saved enough. Everybody gets caught up in how much they've saved. But what you really need to think about is how much you'll need to spend in retirement. What could it take for you to live your ideal lifestyle for the next 30 years or maybe even longer? Even if you think you already have an income strategy, I sincerely invite you to call so we can help you to create a budget to figure out how much you'll need for the retirement you've been dreaming about. Uncover the main risks posing a threat to your retirement, including inflation, stock market volatility, potential tax increases, and yes, skyrocketing healthcare costs. And I want to help you learn about the options for generating income in retirement. And I want to help you learn how to keep your current standard of living in retirement, even as these costs keep rising. So if you're listening to the show today, this is for you. It's not going to cost you anything to do this analysis, and there's no obligation. So whether you've saved lots of millions, maybe $500,000, or maybe even less, I want you to pick up the phone and call us for this retirement income analysis. And the number to do that is 623-792-5496. The strategies we use are designed to help make sure that the money won't run out no matter how long you live in retirement. We aren't doing this to make you rich or double or triple your money, but we want to make sure you don't end up outliving your retirement savings. Again, that number is 623-792-5496.
You really need to take advantage of this opportunity from Phyllis to make sure you won't run out of money. And you might be able to even boost the size of your portfolio. So get started today at 623 623-792-5496. That's 623-792-5496.
When it comes to your health, it's clear. You consult your doctor. So why not consult a professional when it comes to money? Just like your doctor, the advice you get from a financial advisor can have a direct impact on your quality of life. Are you paying too much in fees with your current financial professional? What could happen to your nest egg if there's a market correction? If you're unsure, it may be time for a second opinion. Phillis Sachs-Pilvinus is an independent advisor. She doesn't have a boss on Wall Street. Phillis and her team at PSP & Associates specialize in designing retirement strategies that can allow you to spend more time enjoying life and less time being concerned about your finances. Get your second opinion. 623-792-5496. Phillis Sachs-Pilvinus and PSP & Associates can help make sure your golden years are just that. Golden. 623-792-5496. That's 623-792-5496. Investment advisory services are offered through PSP Financial Services, LLC, an Arizona registered investment advisor. Phillis Sachs-Pilvinus is also a licensed insurance agent in the state of Arizona.
Is your retirement plan ready for the long haul? Get a second opinion today from Phillis Sachs-Pilvinus. Just call 623-792-5496. That's 623-792-5496.
Phillis, thanks for joining us today. This is Retire Financially Fit with Phillis. 1975, the year Jaws hit theaters, becoming a summer blockbuster, and of course, giving us that very famous phrase.
You're going to need a bigger boat.
It's one of the best scenes. Phillis, you remember seeing that movie when it first came out?
Oh, my goodness, I do. But I also remember seeing it. I was living on the Cape after my first year of college, when we watched it again.
Yeah.
And I used to go swimming at night all the time.
No.
On the beach. Not after that.
No.
Not for at least a couple weeks.
No, you never wanted to go in the water again. Wasn't safe to go in the water again, right? Wasn't that the line?
Crazy. That was crazy.
Oh, man. And one of those movies, too, like just playing that theme music, I mean, it just sends chills down your spine. And one of those movies that without the score wouldn't have even been something you remembered, probably. I mean, that music is just what made it, right?
Exactly.
Ugh.
That helped.
Love it. Yeah, love it so much. Because we actually, my first time seeing it, it was obviously many years after it had originally come out. But we did see it in like a drive-in theater type of setting and being outside and just, it was just a lot of fun to see that movie.
I remember it so well. Both times I saw it. Yeah.
Yeah. Oh, yeah.
And it was just as scary.
Yeah, it is. Yeah, it is. But again, because of, just that intensity in the music and just you can't help but feeling a little bit frantic when you're watching it.
Yeah.
Right?
Well done. Yeah.
So well done. So what we're not going to do as we continue our discussion today of retirement and we talk about the risks lurking in the retirement waters, we're not going to keep playing that music because we'll all just be riled up.
That's right. That's right. Well, if people don't have a plan, maybe I should play it.
Oh, there you go.
Because they need a plan.
Do that as they're sitting in your conference room. Exactly. You'd have some people a little bit freaked out here. But yeah, Phyllis, we go through all this about Jaws because we're going to be talking about the common financial risks in retirement. That is our top 5 list for this week. And number 5 on the list, healthcare. A major cause of unexpected bills in retirement is medical expenses. According to Fidelity, the average 65-year-old couple can expect to pay $285,000 on healthcare costs in retirement. That does not include long-term care. So again, I'm starting to feel that music creeping up here in the back of my head here. How do we factor in these healthcare costs that are lurking in our retirement?
Yeah, we really do need the music for this one.
I know.
Because, this is nobody wants to think about this. And so many people believe, well, my insurance or my Medicare supplement's going to cover that. When it comes to custodial care or what Fidelity's talking about, co-pays and things like that, they add up. Custodial care can really take down somebody if they don't have a plan for that. Now, having said that, here's where we can have the happy music.
Yes.
If you have a good plan, you can create leverage. Now, every family is going to be different how they're going to do that, but there's lots of tools today other than just long-term care insurance where you pay these premiums and if you don't use it, you lose it. There are other things that you can do that will give you leverage on your own money. So if it's going to cost you for $1 that you put in, you might create $2 or $3, depending upon the way that you do that. And so for our families, we make them aware that this is an issue that really can unravel everything you've worked your entire life for if you ignore it. But we walk them through all the different ways that they can prevent this problem, that they can create leverage. And also very often the tools that we're going to use or the combination of tools are going to be different for people. Sometimes it's insurance products, whether it be life insurance, whether it be annuities with the special health care rider, because back in 2006 under the Pension Protection Act, the government came out and said that we're going to give these insurance products the ability to provide leverage for healthcare, for lack of a better way to do it. And much as we love to hate these products, they have some virtue if you really just look at the pros and cons and strings attached. Sometimes maybe you opt to downsize your house and put away that money or do a reverse mortgage. There's different options, different strokes for different folks. But the idea is you don't have a plan unless you have some well laid out strategy that you would utilize if you have a catastrophic illness ahead of time. Proactive versus reactive. This is real, and I've seen it far too often. Later on in life, needing custodial care, sometimes sooner than you'd ever plan.
Right. It is definitely a huge concern as we talk about the major risks lurking in our retirement. Talking with Phillis Sachs-Pilvinus. She's with PSP and Associates, 623-792-5496. Want to give that number as we continue talking about the main risks to our retirement income. That's 623-792-5496. And Phillis, while I shared those numbers about healthcare costs from Fidelity, those have gotten bigger just in the number of years that you and I have been doing this show. It keeps going up because of inflation. The cost of everything is going up. And here's where I go back to that quote, gonna need a bigger boat in retirement.
Oh, yeah.
The costs keep going up. How do we deal with inflation 20 or 30 years from now?
Yeah, inflation, it never sleeps. If I've said that once, I've said it 1,000 times, maybe more, because it's true. Right now, interest rates are low, inflation costs are low if you listen to, the government, but really, are they low? Healthcare costs, I know that custodial care costs across the country went up at a rate of inflation of 4.5% last year.
Wow.
And even 2 to 3%, 20, 30 years down the road, which is length. Retirement can last people 20, 30, 40 years down the road, depending upon when they retire. Things are going to double, and you have to have income that doubles. While you're working, you get raises, right? But in retirement, unless you plan for those raises and you have a strategy that builds that in, you're not going to keep up with inflation. So I know, for example, a lot of people are thinking, oh my goodness, the market's volatile. I don't want any risk. And you put it in the bank in this low interest rate environment, and Powell says it's going to stay low for a while. You can't keep up with inflation by having all your money there. You've got to have a plan that addresses raises for your cash flow. Otherwise, you could very well outlive your money.
Right. And that is such a huge concern. Another one is interest rates. And we've talked about this before as well. Interest rates have been in a long-term decline. This has been happening for a long time. They're not expected to go up anytime soon. Talk a little bit about the challenge of low interest rates, because it's a good thing for people who are borrowing money. If you're spending and borrowing, it's not really a good thing for people trying to save, right?
Yeah, we call it the war against the retirement, the retirement population. It really is a war that's been waged. Back in the good old days, geez, you could go to the banks and have safe money and earn a nice little rate of return on your laddered CDs, maybe 5, 4, 5, 6, 7%. I remember my grandmother back in the 80s, I've said it before, going from bank to bank. I swear that was her job. She was all of under 5 feet tall. Right? I could see her driving up my driveway in the car. You could barely see her over the steering wheel. She'd get out of the car and she had gone to the bank to negotiate her 16% CD and came out with a toaster or a toaster oven.
16%.
Those good old days, they don't exist anymore.
No. Oh, it's wild.
Yeah, I'm not kidding. I have that vision in my head. But those, for her, those were the days safely. She didn't have to worry. She'd made good money and she could negotiate between banks. Today, if your money is in a money market and a CD, it's not going to go down because of the market, but it's going to erode because of inflation. And really, interest rates are going to rise in the future, but not for a while, not with everything else that we have going on. And people who are perhaps smarter than me, if you can believe that, are saying that. Right. So, that's a really important risk. And the way that you negotiate it is using different asset classes to accomplish having an inflation-adjusted plan.
The number to call to reach Phillis Sachs-Pilvinus. She is founder and president of PSP and Associates. 623-792-5496. Again, that number is 623-792-5496. Working our way through some of the most common risks lurking in the waters of retirement. And the most common, the biggest one of all, Phyllis, is running out of money. That's such a huge concern for so many people because there are so many other challenges. How do you help people feel more confident that they're going to have the money they need as long as they need it in retirement?
Yeah, even if you don't think that you should be concerned about it, you probably should. And the way that we help people is make sure that they have a solid inflation-adjusted income plan, that they have the right appropriate risk for them and what their concerns are, that we have a tax-efficient strategy, that we have a strategy to leverage their money if they need it for healthcare, and that we have the right financial documents, estate planning documents in place if they need those to take care of themselves while they're still alive, someone to make healthcare decisions or financial decisions. Putting it all together is how we develop a plan that makes sure that you're not going to outlive your money. You miss one of those steps, perhaps you're going to give up some money unnecessarily. So let's be proactive, not reactive. Let's start with the Retire Fit analysis. Call us 623-792-5496.
You've been listening to Retire Financially Fit with Phyllis. Remember that number, 623-792-5496. Be sure to tune in again next week for more insights from Phyllis. I'm Jen Rezac. We're glad you spent some time with us here today. Have a great week, and we'll talk to you next time. Investment advisory services are offered through PSP Financial Services, LLC, an Arizona registered investment advisor. PSP Financial Services is an independent financial services firm that helps people create retirement strategies using a variety of insurance and investment products. Investing involves risk, including the potential loss of principal. Any references to safety, security, or guaranteed lifetime income generally refer to fixed insurance products, never securities or investment products. Insurance and annuity product guarantees are backed
backed by the financial strength and claims-paying ability of the issuing insurance company. PSP Financial Services, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. You should talk to a qualified professional before making any decisions about your personal situation. We are not affiliated with the U.S. government or any governmental agency. This radio show is a paid placement.